Welcome to your channel, Dr. Gazavi. Economics and financial issues are very important. Let's go.
FOMC minutes sentiments and their impact on financial markets. With the evolution of monetary policy, the Federal Reserve has implemented policy tools that address concerns as well as communicate discussions about the economy. As policy decisions are announced, the Fed releases documents explaining the Federal Open Market Committee's (FOMC) rationale for the policy decision. These documents convey the economic conditions and forecasts relevant to policy decisions. With the amount of attention that the Fed receives, these policy documents can influence the public's overall economic assessment as well as their beliefs about future policy targets. The most prominent types of meeting documents are the brief statements that are released shortly after the meetings and the meeting minutes released 3 weeks afterward. Much of the previous research has focused on the effect of statements on financial markets because of the timing of their release and their shorter length. As Rosa, 2013, explains, the minutes, however, still receive a significant amount of attention because they are longer and contain more information and nuances about the policy meetings. Examining their importance also offers a more independent analysis compared to the policy statements since minutes releases do not overlap with announcements about monetary policy changes. Connecting to this strand of literature that considers the relevance of policy documents, my current work introduces a semi-automated method that evaluates both the content of FOMC meeting minutes and their corresponding statements. Using my approach, I examine the discussed economic conditions and outlook. In contrast to the discrete sentiment measures used in previous work, I create a continuous sentiment index measure that proxies for the policy rate tilt. This tilt reflects the idea that the FOMC is more likely to raise the policy rates sooner when output is growing faster and/or inflation is rising. On the other hand, the policy committee has a higher likelihood of lowering the policy rates when output growth is lower and/or price growth is declining. Considering the importance placed on the meeting minutes, I evaluate how the sentiments of these policy documents impact the predictability of financial market changes. If the statements clearly and fully convey the state of the economy, then the minutes sentiments will not improve the forecasts about financial markets. However, if the minutes offer more information beyond those included in the statements, then they may increase the predictability of asset price changes. The relevance of new information in the minutes depends on whether the differences are systematic or not. If the statements consistently lessen the hawkishness of the policy tilt relative to the minutes, then the market participants can adjust their expectations and, eventually, the minutes will lose their relevance to markets. Hence, the minutes will have a significant effect on financial market predictability only if they provide a more precise set of information about the policy meetings. To evaluate the association between the policy documents and the financial markets, I follow the literature on FOMC document sentiment extraction and classify the sentiments as hawkish if they relate to more optimistic economic forecasts and/or larger foreseen inflationary pressures. Hawkish sentiments, therefore, signal a higher rate of interest. On the other hand, I categorize the information that portrays a more negative outlook and/or more subdued inflation indicators and therefore conveys a lower natural rate of interest as dovish. Using these sentiment categories, I derive the continuous sentiment index, then evaluate how it affects financial market variables, specifically the Fed funds futures, the U.S. and emerging market equity indices, and foreign exchange valuations against the U.S. dollar. My results indicate that Fed funds futures rates tend to rise, fall, following hawkish, dovish, minutes releases. My findings emphasize the idea that the sentiments in the minutes help guide financial market expectations. The dollar's valuation against several currencies also has a higher likelihood of increasing after the market observes hawkish minutes information. My work not only affirms that FOMC minutes releases have a significant influence on the predictability of financial markets, particularly on the federal funds futures rate, it is also the first to help predict how the markets may change based on the type of information sentiments of the minutes. My findings contribute to the understanding of how FOMC documents, and policy documents in general, may be used to affect the economy in addition to conventional policy releases, such as policy rate announcements. They also give insight into how documents can be better tailored to conduct more effective central bank transparency. Based on my findings, the degree of document hawkishness can be taken as a signal of future policy. Therefore, to be effective at steering policy expectations, central banks have to be careful about how they present their information and how they structure the tone of their document information so that they are consistent with future policies. Together with the conventional monetary policy tools, information included in FOMC documents can be useful in trying to achieve the Fed mandates of maximum employment and price stability, while keeping interest rates at moderate levels in the medium term. Central bank meeting documents have increased their relevance in recent policymaking. These documents assist in communicating the policy decision-making process and in conveying the economic outlook to the public. As my work empirically demonstrates, the documents can also be used for significantly affecting expectations about future policy and predictions about financial market changes. In addition, the amount of information in the minutes relative to the statements may play a role in the relevance of more detailed policy documents. The minutes provide additional discussions about projected economic conditions and therefore gives more specificity about the type of information that has influenced monetary policy. These extra details have a potentially mixed effect on the understanding of macroeconomic conditions. On one hand, the information in the minutes may provide more clarification and credibility to the economic discussions in the statements. Even after seeing the statements 3 weeks earlier, the market participants may not completely understand or believe the economic information conveyed. The minutes may then offer more discussions that clarify and support the information in statements. This possibility is supported by my findings that the statement sentiments have a statistically significant association with futures markets even on days with minutes releases. On the other hand, additional details may also create more noise about the macroeconomic outlook. These noisy signals could distort the clarity and credibility of communication and eventually weaken the association that policy documents have with financial market changes. Future work can examine the accuracy of the information in the minutes and statements and how it impacts the effectiveness of policy communication in guiding market expectations.
Thank you for watching, and please subscribe to our channel. Economic and financial issues are very important. See you in the next video.